Folks, inflation has crashed. Yes, inflation has crashed. Man, we got a lot to get into in this video. It's going to be a busy one, folks. So many different subjects to cover. We got people saying this time it's not different. We're about to have an epic crash in the stock market, right? We've got a lot to get into in this one here today, folks. So I just kind of want to dive straight into it because it's going to be a busy video, a lot of subjects, a lot of stuff I have prepped for you guys. Look at all this, baby. We got a lot to go through here in this one, folks. So appreciate you. This is Trueflation you're looking at. By the way, thank you everybody that subscribed to the channel. I appreciate y'all. Thank you everybody that's part of the Smash Club. I appreciate you, okay? This is Trueflation, what we're looking at here, okay? And Trueflation, in my opinion, is the most realistic gauge, in my personal opinion, of what's going on with inflation or deflation in the economy, right? And we pretty much always have inflation, so it's really in relation to inflation, right? And if you go back to last year, right? Trueflation had us at an inflation rate at over 12% at one point last year, which if you ask a lot of market participants, a lot of them feel like we were in double digits inflations for part of 2022, right? And so I've always felt like this is a little better gauge, in my personal opinion, of what's going on with inflation. They currently have us at 4.2%. That's real inflation as of today, okay? And I mean, you look at this and it has been a straight crash in terms of what's going on with inflation here, okay? Trueflation, historically, government inflation metrics have produced biased outputs, which is, I'll be honest, you ask anybody that knows anything about the economy, anybody that knows anything about government numbers, the stock market, anything, and they do feel like they're biased outputs in terms of what the government feeds you for data, okay? Built on outdated methodologies. They lacked modern measurement techniques, provided limited levels of transparency, and only updated monthly. Trueflation delivers a new inflation truth set built on 10 million plus data points, updating basically daily, not monthly. The methodology is transparent, dynamically adjust to global market conditions, right? And in terms of their methodology, they 15% food and non-alcoholic beverages, so food and drink basically, housing's 23%, transportation's around 20%, and then it kind of goes down from there in terms of, you know, the biggest inputs for what's going on with their inflation. So the fact is, inflation is crashing right now, right? Are we back to the numbers we need to be at, which is under 3% for those that are keeping track at home? No. But the question is, okay, and I'll answer this right now, are we on a path to be in the threes by this summer? In my opinion of that is yes, absolutely. And I believe even the government numbers, which are not, in my opinion, the best way to look at inflation, but even in my opinion, the government numbers, CPI, will be in the threes this summer, okay? That's my personal opinion. Looking at everything I look at, we'll see if it plays out. But that's where we're headed here in this whole situation when it comes to inflation. And I don't think it's being looked at enough, but it will be over the next few months. I think inflation's kind of taken a little back step here because obviously the banking crisis, you got everything that's going on with the economy and all that dynamic. So that's really what's taking the attention. Inflation's kind of moving a little more back page. And I'm telling you, if the last CPI numbers, this was shocking, folks. The last CPI numbers, when it came out, I woke up, you know, it was Tuesday, and I looked on CNBC app. Couldn't even find the CPI numbers. Like, there was always, like, top page news on CNBC. I went to the website, same exact thing. I had to actually Google what the CPI numbers were and actually go to the government website. I was like, are you flipping flapjack and kidding me? Like, this was, like, always, like, the top news story. Oh, the CPI. And then all of a sudden now it's like no one's talking about it. I'm like, okay, well, this is interesting, okay? There's a tweet I saw, the game of trades, okay? They say this time is not different, right? They're saying we're about to have an epic crash. Imminent is what they're saying, okay? Now, these folks make so many predictions, I can't tell, you know, how many are right or how many is wrong. Like, you know, it's always this and always that, right? But in regards to this, it's interesting, right? Because you see this and you're like, oh my gosh, yep. You see 1973, you see 2008, you're like, yes, this has to be massive crash ahead, right? But, you know, this was a great thing that was done this summer, right? And you can always look at these charts, and you can always pull up different time periods in the past, and you can find correlations that are bullish, and you can find correlations that are bearish throughout every single market. And so this doesn't mean this is wrong. This doesn't mean this is right or wrong or anything like that. It's just like, it means nothing. And that's the best way to put it. It means absolutely nothing, because I could cherry pick all these different time periods and go back to the time periods and look at this and look at that. And if you want to be bullish, I can show you bullish scenarios. If you want to be bearish, I can show you bearish scenarios. And so at the end of the day, it means absolutely nothing, right? And this was an interesting tweet somebody said. They said, yes, a sample size of 2 is good enough to predict a third event. Great statistical value in it. And yeah. That's like throwing, flipping a coin. Flip a coin, okay, in regards to that. So you guys are going to see a lot of that over time. You've probably seen a lot of that over the past, I would say, 12 to 18 months specifically. You're going to see more of it. And just understand it means nothing. It literally means nothing. It might be right, it might be wrong, but it's more than likely every single time people are making predictions, it's usually wrong in regards to short-term movements in the stock market. The high majority of the time, it is inaccurate and it is wrong, okay? People get jacked up about it, and then they go load up on put options, and they lose a bunch of money, and they're like, oh my gosh, okay? This is fascinating, okay? Oh man put this in the private stock group. This is going to crack you up. By the way, if you don't know Oh Man, he's basically, if you're ever looking to join my private stock group, my private wealth group, he's the one you have to speak to, and he kind of vets everybody to see, who's a good fit and who's not in terms of that, right? And by the way, if you ever want to speak with him and see if you're a good fit, that's in the description area if you're looking to apply to join us in there, okay? But it's fascinating, right? UBS calls it an acquisition. Credit Suisse calls it a merger, right? UBS, in terms of this, right? UBS to acquire Credit Suisse. Credit Suisse, from their standpoint, Credit Suisse and UBS to merge. Isn't that funny how that works, man? One company calls it one thing, another company calls it the other thing, right? No, I don't know if you guys have seen the details of this, but this is extremely fascinating in regards to this deal, okay? UBS is to pay 3 billion Swiss francs, so $3.2 billion roughly for Credit Suisse, right? Janet Yellen and Jerome Powell both welcome the deal to support financial stability. UBS is to assume up to $5.4 billion in losses, deal to close this year. Credit Suisse rates down $17 billion of bonds to zero. I'm talking zero, like Robert De Niro back when he was in Last Action Hero. He was never in that movie, okay? Angering holders, yeah. I'm not surprised they're angry. I'll put it like that, okay? But look a little deeper, okay? Look a little deeper and you'll find this, right? The Swiss Central Bank said Sunday's deal includes $108 billion in liquidity assistance for UBS and Credit Suisse. I call that a sweetheart deal. That is a sweetheart deal if I ever heard one, okay? And it looks to me in this situation, UBS is going to make out like a bandit, because the government's going to Band-Aid whatever they got to. If they have to Band-Aid anything, they're there for it. $108 billion? Are you flipping, flapjacking, kidding me? And now UBS obviously gets all those assets from Credit Suisse. They get to do a bunch of write-offs here. This is a sweetheart deal for UBS. I mean, just to be honest, this is what happened in the Great Financial Crisis when it comes to these big banks. This is exactly what happened, where the big dogs got bigger. They got these sweetheart deals. They got to pick up smaller banks and smaller financial institutions for pennies on the dollar. Pennies on the dollar. Absolutely magnificent. And next thing you know, boom, 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 things come back to life, and that big bank is bigger than you ever seen before, and even more dominant, right? And yeah, it's quite interesting, right? Now, you might have seen a lot over the past number of months about credit card debt, right? And this is one of those things bears like to bring up over and over again, obviously, and just it gets a lot of headlines, so just financial media in general jumps all over this, right? U.S. credit card debt jumps and hits a record, right, of nearly $1 trillion in terms of credit card debt, right? And so you hear that, right? And everybody gets scared. They're like, oh my gosh, credit card debt's out of control. It's hitting new records. Everybody loses their mind. In less than 1% of the population that hears about that thinks to themselves, you know what? Let me just do a little digging here, and let me just see, is this actually a big deal or is this not a big deal, okay? And for the 1% of you guys watching this video right now, well, it might be greater than 1% because it's this audience, right? Less than 1% of the actual population that would hear that would research this. Might be a lot more of you guys would actually research this, right? But for you guys, give yourselves a thumbs up because I'm proud of you, okay? Because it pays to do a little digging and see how scary something really is, right? Because what if I told you that credit card debt is up less than 20% in the past 15 years? I think anybody that hears it from that perspective would be like, oh, credit card debt's awesome. Like, we're only up we're up less than 20% in 15 years when almost everything else is tripled, quadrupled, 5x'd, right? It's like, wow, that's pretty fascinating. But that's the truth. If we go back to 15 years ago, right, we had about $850 billion roughly of credit card debt, right? And today we're at a little under $1 trillion, right? Do the math on that. We go back 20 years ago, right? And we've had maybe a 50%-ish type rise in credit card debt. In the past, once again, 20 years. 20 years. And you think about how much more expensive things are. Obviously, how much wealth there is in the world now versus just in the United States, we could say, for instance, versus 20 years ago, the assets. I mean, it's like night and day difference between what we have today versus what we had 20 years ago. And yet, credit card debt's only rose, let's say, roughly 50%. We'll take that. In my opinion, we'll take that any day of the week. So the fact is, credit card debt actually isn't nearly as much of an issue as the headlines make it out to be. Because when you actually look back at history, this was actually a fascinating time here that we kind of went through, and there was just a big deleveraging of just, a lot of companies not wanting to take credit risk, a lot of consumers paying off debt and things like that during that particular time period. It was really, really fascinating. Unfortunately, a lot of people chose to pay off credit card debt during that time when they should have been actually investing in the stock market. I mean, imagine if instead of investing in let's say paying off credit card debt, you focused on, investing in the stock market. But then again, when you think about interest rates and how expensive interest rates are for credit cards, maybe they would have been better off because, credit cards are a joke. That's why if you ever, for anybody watching this, if you don't already know this, if you ever swipe something on a credit card, pay that baby off before it starts accruing interest, because it's like you have to pay 20-something% usually in terms of, and then to offset that, you need to get 20% plus gain in the market, and that's not easy to do, right? So for anybody that's not aware, you use your credit card, you pay it off right away. I use credit cards all the time. We pay it off right away. We never accrue a dime of interest. Don't do that, okay? Don't do that. It was interesting while I was prepping this video, right? I don't know how my son and I got on this subject, but, we were talking, I was showing him kind of like world population and births and deaths and stuff like that. And, the ticker goes up constantly, right? But I saw something fascinating while I was looking at that, right? Public military expenditures today, $4.2 billion. That's incredible, right? And my son saw that and he goes, what? We're not even in a war. He starts freaking out. Why are we spending that much? I'm like, well, first off, I think this is a worldwide number. But secondly, I just thought it was fascinating that he was getting all worked up about how big that number was. He's 8 years old, if you don't know, okay? He was getting so worked up about that number. And I was like, man, if only he knew how many Americans get worked up over that number, like how much we spend on military all the time. It's fascinating, right? And look at this here. This is pretty crazy too, right? The amount of money spent on video games today. Nearly $300 million a day spent on video games, whether that's in purchases during a video game or actually just buying an actual video game or whatever, right? And I just want you to take into account how big that number is today, because imagine what people would have said 30 years ago, 40 years ago, in regards to video games, right? And I remember the old systems I used to play on as a kid, I think I used to play on the original Nintendo, if I recall, when I was a little kid, right? And think back to 30 years ago, in how much of a joke people thought of the video game industry, right? And how small it was, and it's just something, maybe a few kids play or something like that. And to see where it is today, $300 million or so spent per day on video games. It's amazing, right? The other number that was fascinating to me is, nearly 9 billion Google searches a day. That's just a crazy number to think about, like how many searches are happening per day. Something else fascinating I saw here. Check this out, guys. This was just today, so I'm sure by the end of the day it's going to be $600 million plus spent on obesity-related diseases in the United States of America today. Think about how big of a number that is. Run that number over the course of a year. Tell me what you get. Run it over the course of 10 years and tell me how much you get, right? And it goes to show you kind of like, where we're at, unfortunately, health-wise in regards to the United States. And I know a lot of people, I bought Texas Roadhouse stock recently, right? And a lot of people are kind of making fun of me because obviously, like, Roadhouse is kind of known for, let's call it not the healthiest food in the world, fried chicken, these bloomin' onions, loaded baked potatoes, ribs, like all this stuff, right? And, some people are like, oh, Jeremy, switched from all these, super healthy companies, right, to, unhealthy companies, right? But at the end of the day, like, I thought we were making strides in Rona, and I thought we were going to focus on our health more than we did. Let's just put it that way. And what I've seen is just people kind of go back to their old routines as Rona kind of wound up there and just kind of, or I should say wound down. And people just went back to their old ways of eating and those sorts of things. And it was kind of unfortunate, right? And like myself, I love to eat these for lunch, for instance, right? A veggie hemp bowl. I mean, this is just clean eating, baby. Clean eating. Look at the ingredients list. I'll pull it up for you guys. That's clean eating, right? Super healthy. Super healthy. Like, it doesn't get much healthier than that, to be quite frank, right? But let's just be honest. If you gave the average American an option for lunch, and they got that as an option, or they got this, I mean, I wish they chose this. But just in all reality, they're going to choose this. We know, Americans are unfortunately addicted to these very unhealthy diets, and it's hard to break. It's really, really hard to break, and so it is what it is, man. It's very, very frustrating, and it's crazy because it's hard to even see the situation getting better, right? And I was taking a look at this, right? The percent of Americans that are either overweight or obese is 70% roughly now. 70% of Americans are either overweight or obese now at this point in time. It's even becoming a problem for the military. I remember first hearing about this, several years ago. And basically, the U.S. military has a huge problem with obesity, and it's only getting worse. Basically, if you didn't know, the military, like who's really in the military, right? It's folks 18 to 30, right? That's going to who enlists in the military, right? And over half of young adults are now obese or overweight. Study finds over half. So basically, if you're the military, you have to wipe out at least half of people from the United States of America that are kids. Like half of them, you don't even have a possibility of being in the military, right? And so that's just a crazy thing. Like, I mean, it's a wild time, man. It's a wild time when you even think about the implications if we ever actually had a serious battle, let's just call it that. I don't want to use the W word, it might get demonetized, but and it brings me to a stock like Weight Watchers, right, which is a fascinating stock. You look at the stock over the past 20, 25 years or so, and it's had some big ups, and man, it's had some big downs, and recently it's been in a big down, but actually recently they just acquired a company that's going to allow them to sell, let's call it a product that is very, very popular for people that want to lose weight. And so, I don't know, it might be worth doing a little digging there and seeing if there's something there for people that might be interested in a more speculative play that you're looking for something to do some more research on. Do a little research on that one. I'll put it like that, okay? Everybody's always looking for the easiest way out. Let's call it that, right? Ex-Goldman CEO Lloyd Blankfein, this just came out here recently in the past few hours, says bank rout may depress growth even with robust capital. By the way, Lloyd Blankfein was a very good CEO for Goldman Sachs. Very good. He got them through the great financial crisis. I always looked at him as kind of like, I respected him as much on Wall Street, if not more, than even Jamie Dimon. And I kind of put Lloyd Blankfein and Jamie Dimon like up there at that upper echelon of like those guys just do a damn good job, and you don't want to mess with them. Like those guys are on their game, right? Turmoil in the banking sector will probably weigh on economic growth as lenders become more conservative, former Goldman Sachs CEO Lloyd Blankfein said on Sunday. Quote, the greater financial environment for financials leads to husbanding, of capital and risk-taking, less and more conservative investing and lending, and inevitably lower growth, Blankfein said. Well, some banks have been hung up by poorly managed concentrated risks. The overall banking system is extremely well capitalized and substantially more tightly regulated than prior challenging times, he says, right? In 100%. But the interesting part of this is it is going to weigh on, in my opinion, economic growth at least a little bit in regards to this whole situation, right? Because, and I think it's actually, it hurts a little bit short term, right? If we think about banks being tighter with lending standards and all those sorts of things, it hurts a little bit. Deleveraging, anything like that. It hurts in the short term, but I can tell you that's what sets you up for a 10, 20-year span of expansion. Those periods we went through. Remember when I showed you the chart earlier for credit card debt? And it showed you the deleveraging of credit card debt during about a 6-7 year span, right? You could say maybe that hurt growth a little bit in the short term, but ultimately it was a great thing for many, many years to go in the future, right? And so you can look at these things two ways. You can look at it from the negative perspective, like this could hurt short term, or you can look at it from the perspective of like this is really healthy long term, right? No different than, instead of eating, 4 pieces of pizza, I eat something healthy. I mean, it hurts my feelings in the short term because, damn it, I want to eat 4 pieces of pizza. But you know what? It's better for me long term if I eat something a little healthier, right? And so that's kind of the way I look at it. It's like the financial system in general goes on a little bit of a diet. And I don't think that's a bad thing for the long term. I think that's a very good and healthy thing long term. So, in the market, stay focused, stay taking advantage of opportunities out there, folks. If you don't know what you're doing in the market and you want to learn more, check out my private wealth group, my private stock group, where you can learn directly from me on everything I know up here and I've learned over the past 15 years. That will be in the description area. If you're looking to join my Patreon, you enjoy the content I put out on the channel and you want to support the channel, check out the Patreon. You also get to see my portfolio in there, the Patreon portfolio and all the moves I'm making in there all the time. Appreciate y'all. Much love as always, and have a great day.